Hello and welcome. My name is Doug Garber from Pitch the PM. Today we have a special roundtable discussion on the AI and semiconductor ecosystem with Doug O'Loughlin, the president of SemiAnalysis, and Michelle Brophy from AlphaSense. The conversation today is an open exploration using the leading industry experts and resources. I know you will find it insightful. First, I'd like to turn it over to Doug, and can you just tell us a little bit about SemiAnalysis and how your company got started and what you do?
Yeah, so unspoken in this is Dylan Patel, my business partner, and probably the man himself. He started Semi-Analysis in 2020. I kind of started another newsletter called Fabricated Knowledge. We always work together. I joined SHIP last year, and Semi-Analysis has really changed and Fabricated Knowledge has changed from two newsletters into the what we think is the world's leading AI and semiconductor research platform. We're an independent research voice, and the work speaks for itself. We're mostly known for our long form content, often thousands of words, diving into topics such as HBM, hyperscalers, GPT-4, other models, right? From the model layer and the infrastructure all the way to the chips and silicon. So that's what we think of as our coverage universe. We really focus on the technology. We are a technology first firm. And one of the things that we have that I think no one else does is we follow from the most minute detail, meaning the materials, the packaging, the semiconductor fabrication itself, all the way to models, tokens, economics of tokens, neo clouds, data centers. So by having that full stack integration, we understand the space better than anyone else. And then I think our other claim to fame that I always love, and I have most of our sales and marketing team say, is we go to 80 conferences a year. That's a lot. We have 35 people, maybe actually, I think soon to be more. But I think we really pound the pavement more than anyone else. That means we are going to conferences every single week of every single year. Someone is doing research deeper into the technical side. And that's what keeps us sharp and kind of that shared learning, as well as and honestly, an incredible source of human talent is what makes us the best. And that's, the 4 second, 5 minute pitch, I guess, of semi-analysis, who we are, what we do, and why we're who we are. So
And who are your clients who subscribe to
so
you?
yeah, let's chat about it. We work with industry, meaning the leading semiconductor companies, labs, as well as hyperscalers, but also we work with many of the largest hedge funds and long onlys in the world. So an independent research firm from that perspective. We work with. I don't think I'm supposed to name names, but it's the usual suspects. Almost everyone that you've probably heard of. So
And you're all vetted, you got through their compliance departments, and you're all good to go.
yep.
When someone wants to be a super expert in, 5, 10 names, it's getting even more specialized. They're going not to the sell side, and they're going directly to the people that are at the industry level, the field.
Yeah, that's correct. So yeah, we are vetted through I think everyone's major platform compliance program. But yes, you're right. Not even just 5 to 10 names, right? I think I really want to make sure I highlight this because there's a big difference, right? Research itself, I think, has kind of gone historically been a very name coverage, like a name thing, like, hey, you own these 20 names in this universe. But I think the thing is, that's not enough in AI and semiconductors. You have to understand the technology. These players play in a field of constantly changing technologies, like whether it's some, insertion of backside power and foundry, which may or may not happen, to a different type of MOE, like model layer. You have to understand the technology. And then I think the company's positioning is backwards of that. So that's how we view ourselves. We're a technology coverage company first. And that often means that we go deeper into names that are very niche, but also understand names in a level of detail that no one else does. So,
Great, great. And we also have Michelle. Can you give us your quick background and what your role is at AlphaSense?
Thanks, Doug. I just like to echo that semi-analysis I've been covering. I've been following you guys for a long time, so I would echo the quality of your research is fantastic. Hi everyone, I'm Michelle Brophy, Director of Research for AlphaSense TMT. I spent several years as an analyst and PM on the buy side covering this space prior to joining AlphaSense. And a quick word about our AI-driven market intelligence platform, AlphaSense. brings together qualitative market perspectives with access to over 500 million documents, including 200,000 expert interview transcripts. With deeper insights, and when they're needed, AlphaSense's expert call services also provide direct access to high quality, vetted experts on demand, all without friction or price markup of some of the legacy models you see out there. So just a quick word on the platform there. Doug, I know you're familiar with it, but to our audience. So I'm really looking forward to this discussion. It's perfect timing, as we were discussing a little earlier. I'll turn it back over to you.
Great. And Doug, I'd like to start off kind of from the top-down perspective. Throughout the year, we've seen the hyperscalers continue to outspend their CapEx budgets and continue to increase them each year. So what are you seeing from a industry level CapEx? What's your expectations for growth? And why do they keep outspending what they've expected and raising CapEx budgets? The hyperscalers, we'll start with them.
So let's first start with maybe a little bit of context. So in December of last year, people got really scared when Microsoft started to slow down in co-location. And since then, what I think the word that describes the whole industry is acceleration. And we're seeing that specifically through Oracle, kind of stepping into the co-location void that Microsoft left behind to specifically service OpenAI's training as well as inference. But other big players that are starting to accelerate is obviously notable in the headlines is Meta, but also Google. We were actually a little low, and we've continued, just for context, we've been above the street this entire year, last year, and we continue to be above the street for CapEx estimates next year, mostly because we continue to see a lot of acceleration. And that mostly goes to our supply chain work. And I would say there's two really big practices here at SemiAnalysis that cover that. There's the accelerator model, which is what we call the accelerator model. It's like a whole, it's a single product you purchase and essentially covers, the entire supply chain of who is making what chips at what size, and like who has what socket. And, we also do allocation work, meaning who is purchasing the chips. So it's the supply demand model of the chips, which is the huge part of the BOM of how much it goes into purchasing all this CapEx. And then on the other side of it, we have the data center work. So the data center is a little different, and we have a whole supply demand model there. It's the data center model. And the data center, specifically, our best coverage is in North America, but we also cover all around the world. We do a supply demand county by county, location by location tracker of hyperscaler self-build as well as co-location. And so adding those two together, that gets us to the hyperscaler CapEx number. And the hyperscaler CapEx, I think we've been better than everyone else. And that's mostly because we're able to see the things actually coming. These projects are very large and often, they cannot be missed, because if you think about it, a data center, you can see them from space. So.
And how are you seeing, so you're saying you track the hyperscalers, which we all get the public announcements for, but you're able to track it through the supply chain ahead of that. And then you're also tracking the private market from a bottoms up perspective. And are you seeing, how are the other companies funding their growth? The hyperscalers obviously have a lot of cash flow and great balance sheets, but in the private market, what does that growth look like versus the hyperscalers?
So let's specifically break it out, because I think the private market almost is a misnomer. The neoclouds, right, is what I think SemiAnalysis, to be clear, coined the term. I'm very happy it's become a industry-wide term. But neoclouds specifically aren't really that big of the incremental step up. CoreWeave, Nebius, those are big incremental. They're starting to talk about these gigawatt projects that they could potentially have, and the revenue contribution for that could be meaningful, but it's all a drop in the bucket compared to like the 4.5 gigawatts that Microsoft has, or Meta is pursuing, stuff like that. Those multi-gigawatt projects is the vast majority. I think what we're really seeing that is not in the private markets is the sovereign. Sovereign demand is really the big incremental that's changed from last year to this year. We're talking about tens of billions of dollars from the UAE, the Middle East, but also even European Stargate. We're talking like, I think the total, there's this really great article about it. The total number of projects that announced potentially for Stargates, which is effectively an internal OpenAI cluster, is like 72. The actual, number I think we think is like 6. But these are gigawatt plus projects. They're very large projects, and that is where we're seeing the incremental demand. It's not just from private companies. It's often private companies connected to countries, and the countries really want to make sure that they do not they essentially don't miss the capacity race as well. Another big example for this is because, you know, language specifically for LLMs, if it's all going to be an English LLM, your language over a long period of time might be not eradicated, but de minimis, or let's say not as important. So having a French LLM is important for the country of France. And so I think there are domestic reasons why people want to invest outside of just, having the biggest, best model.
Deco, I'd love to follow up for a quick second there because AlphaSense is seeing somewhat of a similar trend, whereas we saw virtually no market share. Neoclouds are trending towards like 12, 14% of market share, and sovereigns are creeping into like 5 to 8% over the next couple of years. Do you agree with those kind of numbers? And where do you think they can trend, in 2 to 3 years?
So I can't speak for everyone with high precision. I definitely work with, and the data center and the accelerator teams are much deeper than me, but I think the number for sovereign is much higher. That I could feel very confident about. Neoclouds will continue to pick up that slack. And honestly, if you think about neoclouds, a lot of them are effectively a function of leasing capacity to hyperscalers as well, right? The big CoreWeave contract we're talking about is OpenAI, but also Google, right? There is a lot of maybe not double counting. I think it's the difference between stocks and flows, right? But I think sovereign is really the big incremental, and the difference is its power, right? I think in the United States specifically, a lot of the power is accounted for, and if you have to go look for power, you're going to be looking outside of the United States. I'm sure you guys all know this, but like every single transformer has like a 24 to 36 month backlog. Every single CCGT combined cycle turbine has 36-month long, maybe even longer lead times. I haven't flipped GEV, but Siemens, GEV, Mitsubishi, these guys are getting the frantic race to power is the big difference. And I think the place that you see a lot of the power slack in the developed world, it's Europe. France has a ton of nuclear power that's available. Germany, not so much, but the Nordics, for example, do. Spain does to a certain extent, but I think the grid's a little bit unstable. And obviously the Middle East has a lot of energy that I think they're really looking to get online.
Yeah, I mean, there are places in the US where we have a lot of energy. We flare a lot of gas too, and there people are looking at even smaller, diesel engine generators and stuff to kind of bridge the gap as well to
Yep.
put this in. It'll be more expensive,
Yeah.
but capitalism will
Hey,
figure it out.
I think there's so many okay, I think this is a phrase coined by Jeremy, our data center analyst, the frantic race for power. That's really what it is. You're talking about Generac, right? Like the diesel backup generators, but we're also talking about like Bloom Energy. We're talking about like battery backup at AEP for Ohio. Also on top of that, we're talking about like on-site gas generation, some of the smaller single stream turbines from CAT or GEV, the Rice turbines, those are starting to become part of the mix. And all of this is like this push and pull because everyone really, really, really wants power, right? And a lot of this, I think, is almost gated or dictated by the government. And so we're starting to see some stuff that we think can maybe accelerate that, meaning that there's faster interconnect requests and an ability to get power on quicker.
Yeah, there's definitely, the Cummins, the Cat, all those engines, and now you've got a half a dozen oil service companies that are now getting into the distributed power market just to serve this to bridge the gap. So it's kind of a new industry that's popped up here for a little bit. And I wanted to get back to the sovereign demand. And can you quantify the demand there? Because you have kind of the hyperscalers, and then you had the neo clouds, and now we have the sovereigns. And is that double count, or is that a third leg to the stool here? And
I
how
think that's a third leg to the
relative
stool.
to the others?
Yeah, I think it's a third leg to the stool. The double counting, I think you can argue, let's say a hyperscaler outside of the United States is kind of where it gets a little iffy. But realistically, a lot of the European companies and European projects are often chosen local champs. For example, Mistral, which is known for its LeChat, right? They're the leading open source in Europe. They're actually going to become a neocloud provider. And I think that we're talking about nation state level funding that they're going to have access to deploy multiple gigawatts. I think the reality is that European companies specifically don't want to miss out on making, like the tech giant regime of the last 20 years effectively has been US American hegemony, right? Where Google and Apple and all these tech giants effectively dictate technology across the world. And I think
the realization is compute is becoming a really powerful, important currency. You can maybe do some analogies back to the telecom overbuild. So there's some concerns there, right? But I don't know if we're quite there yet. But at the same time, this really important currency is required for AI. And I think that the reality is you have to own the currency in order for you to even compete. And so that's why they're trying really hard to support local champions. And I think we'll see a lot on that front in 26.
When you say own the currency, I mean, it's really China or NVIDIA, right? Those are the two.
Yes.
It's like Boeing and Airbus. I mean, you might have a hyperscaler, but someone's got to supply that. So that's what I talked a lot about with our friend Aaron Ginn over at Hydra Host.
Oh, nice. We know Aaron at Hydra Host. He's a great guy. So yeah.
Yeah. No, he does a lot of Wall Street op-eds and kind of went down that road pretty early, kind of called it. We're also seeing this dynamic where you have the hyperscalers investing in their own silicon, their own chips. And I'm trying to, understand how competitive is that? What's the roadmap there? Is that only for internal use? How does that compete with NVIDIA? And what are your thoughts on what that means for market share going forward?
So we definitely think NVIDIA is going to be the big winner here, right? But like everyone else, I think we don't believe that they can have 95 or 99% share going forward. Something has to give. And what's going to give is ASICs and self-driven programs. So let's talk about each of the self-driven programs outside of NVIDIA, because despite some really successful hyperscalers internal custom silicon programs, Tesla just canceled Dojo like yesterday. So you can tell that while it is in theory cheaper to make your own silicon and essentially absorb the NRE cost, in reality, it's pretty hard to compete with NVIDIA. The famous thing that Jensen says is he won't be able to give away H100s for free because effectively the TCO of the B200 and the GB200 is going to be so competitive. That's actually real. Your marginal cost of electricity is going to be the big determiner. And so how much revenue you make out of electricity is like the important question. And NVIDIA just happens to be the most performant. Now let's talk about, with all that being said, let's talk about like in order what we think the programs are. I think second is definitely Google. Google's TPU has been a long time coming. They made this choice to make custom silicon. I don't even know how many years ago. I'm not gonna say a decade, but it's like V7 right now. So like it's been a long time coming, and the thing that's important in silicon is no one makes a good first chip. That's just the reality. No one ever makes a good first chip. You're seeing, and so that's number one. TPU has a really good efficient networking. They have this they have really clever things like ring attention. They have a fully integrated stack. And that's a really clever strategy because in a lot of ways, they have the cheapest cost per token because they're totally integrated. But that total integration is kind of like almost a little fragile because you have to believe in Google's ability to win the AI race, right? So, versus the OpenAI strategy where there's modular levels. They can choose what is the best hardware, but they're also really focused on the best model. If you're like a semiconductor guy, it's like an IDM, a vertically integrated IDM like Intel versus the fabless industry, right? Where you can plug and play what works best for you. So what works in the long run is an open game, but we're clearly seeing OpenAI in the lead. So TPU, vertically integrated strategy, number two. And one of the things that we're talking about, or I think is relatively new, is in the last quarter, Google talked about selling TPU externally for GCP. That's a big deal. That is relative. Like, I don't think that markets quite realize what that means. And I think that we'll start to see GCP accelerate meaningfully because of large external customers. Anthropic, for example, I know for a fact uses CPUs, but also other large customers might be in the pipeline there. So that kind of itself points to success because Google is for the first time ever going to have external clients use a meaningful amount of TPUs. And I think that that's a very big deal and kind of points to why they're number two. Now, number three is probably going to be Trainium. So Trainium at Amazon it's an interesting product. Like I call it the Amazon Basics NVIDIA chip. The reality is it's definitely not as performant. So if you on a per megawatt basis, you are definitely going to make a lot more money just plugging in a GB200 than plugging in Trainium. But the difference is they're capturing a lot of that margin in-house via the Marvell all-chip to
debacle, honestly, in public markets. But their custom chip is be able to capture more of that TCO, and so they're able to offer a lower price. And specifically, Amazon has a kind of an advantage, or rather, like I like to think of it as like everyone was looking around at the bar and they're looking for another partner. And Anthropic and Amazon kind of looked at each other and said, Amazon said, we have the largest compute legacy infrastructure. And Anthropic says we have the largest compute need and we're number two. So how Microsoft and OpenAI, original partnership, Amazon and Anthropic partnered up. Now, what that means for Trainium is that you have a lot of cracked engineers at Anthropic who are willing to go through Trainium's hell. Like there's a really good tweet on this. Like I think it's typed female, whereas like Jeff Bezos Trainium hell, it's like a whole meme about how hard they are to use. I mean, using the chip for the first time is not even just it's not even just a hardware. Like getting the best hardware is one thing, but getting the best software and ecosystem is a whole other thing. That's the reason why MI300 never had meaningful adoption. We talked about this in an MI300 post late last year, where we kind of benchmarked actual real world performance. And even though the transistor, or what you're getting on an HBM per dollar per basis of an MI300 versus H100, H200, the actual throughput of using the chip, NVIDIA wins out. And so that's kind of the same problem that Trainium is going to continue to face, but they have a very large and almost captive customer who has to figure it out. And that's the Trainium bet. And I think it's a hedge, right? I definitely don't think it's going to do that great as Trainium 2. I think on a memory bandwidth basis, which is really important for inference, it's pretty cheap in terms of how the chip is designed, but it's definitely not as good as NVIDIA, or definitely not as good as TPU. I'm trying to think about the other projects here. That's very funny because that's kind of tells you how I think about them. Maybe third or fourth place. Fourth place I'm going to say is MTIA. MTIA at Facebook with Broadcom is a really, really impressive chip, and it's very specifically focused on something, which is Rexus. Now, as you know, most of the 50% plus of the internal CapEx that Facebook is using is for Rexus, and you can see the ROI very quickly there because effectively, last quarter, Meta had their sales accelerated, or maybe they accelerated. I think they accelerated. Yeah. So sorry, want to make sure. And the big thing though is they did it on increasing ad prices. That's literally that's showing you the ROI that a Rexus, by giving and serving a better ad that's more targeted using a better model, is getting a higher CPM because it's able to convert more. And so that's like that's the big push that Meta has. But I think Meta has kind of two levers here. For their internal Rexus, which is a huge compute need, they're going to push as much as they can onto MTIA, but they're also doing the super intelligence thing, right? Where they're hiring hundreds of millions of dollar comp packages, right? So in order for that to work, they're going to have to spend a lot on compute. And those compute researchers are not going to be, grinding it out in MTIA kernels to make it work. They're going to be purchasing GB200. So that's how I think of the Meta strategy. The internal use cases are going to be extremely heavily used for Rexus on MTIA, but going forward, and specifically on the CapEx needs in the future, their commitment is the most compute per researcher, and they're definitely not even close. So that's the, surprise, Meta is going to increase CapEx next year meaningfully. So trying to think about the other ones, Maya, we are extremely dismal on. I'm sure many of the people listening to this have heard about all kinds of great things in supply chain. But the reality is a good chip is the reason why you get a lot of orders. And as we currently see it, Maya has really, and Microsoft honestly has never really shipped a really convincing chip. Maya so far, as we currently see it, is no different than the past. Tesla dead with Dojo. They're going to be pushing very hard. And then we can talk about AMD. Let's actually slot AMD. I think AMD is below TPU and maybe above or tied with Trainium. Maybe we'll just say tied with Trainium. AMD is really, 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 really good in terms of designing to a spec, but making the ecosystem work, meaning ROCm, is a little bit harder. I think the analogy that keeps popping up to me is the consumer GPU wars, where they have a cheaper, okay, let's just, rewind 10 years to NVIDIA coming out with a new GPU. NVIDIA comes out for 6 to 12 months. It's like the best. It's meaningfully better than the performance. And AMD comes out 6 to 12 months later, and it's,
90% of the performance, 70% of the price, and people are really excited. And maybe next year AMD will beat them. That is quite literally what's happening in the data center GPU market all again. But this time, I think the next generation that people are getting excited about is MI355, but also the MI400. MI400 rack scale is going to have a lot of bandwidth, but like we're seeing for the GB200, it's going to be hard to ramp. I think there's a chance, and there will be a similar analogy that happened for the MI300 ramp, where people got really excited about these potential big things on a cheaper number two, but when the actual chips came out, they disappointed. Now, that might happen again with MI400 with the racks. We're seeing how hard it is to ramp a rack scale solution, and I would expect AMD to run into the same issues. So yeah, that's a lightning take of the entire compute ecosystem as far as I see it. Any questions, I guess?
That was enlightening. I mean, that's a great summary. I do want to just ask one question though, because a lot of times people say, all right, the competition for NVIDIA is China, and they obviously have a lot cheaper electricity cost over there, burning more coal, etc. How do you think about the competition if you're going to include what China offers?
Okay, so this is a whole other this is like a whole next level thing that I think is important. It's like a meta game, right? The West versus China. China has a very different bet, but to be clear, they really want to buy H20s for some reason, right? Like, so I want to put that into perspective. The H20 in the NVIDIA ecosystem is still really strong, but just like everything else, China is going to control their own compute destiny, right? They did it with the internet, and they're not going to miss out in silicon. If we're talking about like the same thing that Europe feels, I think China definitely feels the same way. But the problem that's a little bit more complicated is the export control game. What we've done is we've effectively limited them to 7 nanometers using EUV. So there's no EUV machines in China, big deal. And so they're doing N+2, mostly done by SMIC. Now, this is a really interesting, it's going to be really interesting as years go by, because China's being forced to go down a different technology tree altogether. There was a Twitter post about NIL, which is like nano imprint lithography yesterday. We'll see if how real it is. I know there's definitely some EUV moonshots that are being pursued in China. Who knows what that will look like, but China is very, very, very focused on a top-down industry level, like almost nation state level project to own compute. And so the main player in that is Huawei. Huawei is an super, super impressive company. House of Huawei recently came out. Highly recommend the first half of the book. The second half's kind of like, if you ask me. But they came from a switch maker making essentially just, kind of low-end switches to compete with the West just to have a business at all, to HiSilicon essentially kicking into gear as the surveillance video state. That's like their big first socket. And now HiSilicon and the Huawei Fab Network, and we've written a ton about this, is like this vertically integrated Chinese supported ecosystem that is a pretty compelling number two. Now, what they've done is it's called the Ascend 910B or the Ascend 910C. And essentially it takes the rack scale concept and it scales out in a way that China has unique capabilities in that the West doesn't. Meaning, one is power. We have a really good post on this. You can go semi-analysis, search up Ascend. And the cloud matrix, what it does is effectively it's like 2.7 times more power, but it's 70% more performance, specifically in flops and bandwidth. And that's the big trade-off that they're making. So if you have, the Three Gorges Dam, and you have, the most nuclear power incremental capacity and ability to add capacity coming online, what's going to happen is you can make the choice of choosing optics over copper. Copper is an order of magnitude less power, and that's why the NVL72 is a copper domain scale up versus the optics domain scale up can go a lot bigger. That's why it's 384. And so they're paying for more optics scale up, which costs a lot of power, but they have a lot of power, and that's the competitive difference. I think they're definitely a very, very capable player, no doubt in my mind. But we want to see how this actually translates into models, because there's some pros and cons for sure. I think it's going to be a race. I will never bet against Chinese engineers. They've done an amazing job. If you told me 10 years ago where they are today, following the industry, or I guess 5 years ago, I would be surprised. I really would be. They have many, many aspects of the stack. And truly, if they had an EV machine, they would be shipping the leading edge node today. I truly believe that.
And so they're going to continue to scale this out, whether if it's packaging, scale up memory, optics, they're going to have a different technology tree, but I think it's going to be a really compelling product over a long enough time. So any kind of details you want to kind of dive into that or not?
Doug, I'd like to ask you a couple questions there. It's interesting that you talked about the players in the US, but the innovation in China. So I'd just like to flip it back and talk about some of the innovation going on here and what you see is maybe changing the list in order of like who's winning. It's NVIDIA excluded, but like it sounded to me like you feel like Google is doing the most interesting stuff with their TPU. Maybe take that a step further if you could.
Yeah, so let's talk about Ironwood is later, and I think later half of 26. And that's going to be a big ramp that I think is very interesting. But I think the thing that is much more incremental is the fact that GCP is selling external GPUs, and they talked about it in the call. Now, the thing that is kind of also crazy is that the only CapEx number that we were surprised by initially was Google. And one of the reasons why is they do something called power oversubscription, and pretty much they're starting to like essentially you oversubscribe to co-location. So because you don't need the surge at all different moments in time. So actually, in theory, if you just hook more power up to it, you actually do have more compute available. And I think that that's the lever that Google is starting to do. Google is starting to wake up. And I think they're going to, they have this amazing second place technology and they own the entire stack. They pay less margins. They have compute and they have the way to consume it. That just seems like an amazing opportunity sitting right in front of them and they are not paying attention. And now I think they're starting to pay attention and also scale up their ecosystem and sell to externally. And that's the big thing that's happening. We saw it this quarter, specifically calling out GCP selling externally to TPUs, but I think we're going to see a lot more of it in the future.
Is there any downside to that? Selling externally? I mean, they never did it before. They've had it for a while.
So okay, look, I think in theory, big brain Google would own all of AI, be the absolute leader in AI, have the lowest cost of compute, and have and never ever be able to like sell it to anyone externally. So they essentially have this like full stack margin that no one can compete with.
Yeah.
But let's be real, guys. It's Google. Guys, it's Google. Like I'm gonna like I have a strong opinion about this and I will state it and I'll try to be as nice as I can. Like they're going to be the IBM of this generation, I think, where they have all this information, they have like all this technology, all this research, all this stuff, and effectively they like miss the big picture. I think Google has like a lot to, and like, okay, I knew Google, like the stock and the technology, we're gonna like kind of differentiate between the two, but they had 99% effective share in search. AI is like, the ChatGPT queries are actually moving the needle. That, search volume is going down. AI overviews is going up. And I don't know about you, but the AI searches I am doing is not at Google. So they have a real competitive threat. And the reality is if they were in first place, they would never, ever, ever give it up. But they are not in first place. Their revenue sold externally for Gemini tokens is de minimis. It is almost nothing. I think, do not quote me on this. I think like Anthropic Claude Code is bigger on a purchased tokens out. And this is the company that invented Transformers, guys. Like this is like, so I think this is a defensive move because if you're not in the race, you have to and you see this actually is if you're first place, you're closed source. Okay. If you're second place, you're open source and trying to get people to use your ecosystem. And so I think this is Google trying to get people to use their ecosystem. So they have a little bit more like ecosystem power so that more developers use it, which increases the speed of Google, which maybe increases Gemini. So that would be the way they catch up. And I think by getting more people to use TPU, you could probably get the TPU ecosystem to be stronger and faster. And that's what I would guess to be the difference because like a TPU versus Google, we're talking about TCO for a customer. I would say it's pretty comparable in the big picture. Like, there's a lot of different ways, like how much per hour you're paying, but it's not like TPU has this like order of magnitude different. It might be a little cheaper on the margin, specifically for some use cases, but I think Google would be real remiss not to just like sell the infrastructure that they have available to them. It's like a lever they can pull. And if they can get more customers, that's like, a way that they can make the Google ecosystem stronger instead of like attriting it all to OpenAI and others.
Now, are we talking about selling their capacity within their own data centers to other people, or are we talking about actually selling the TPU to other neoclouds?
I think more of the first, but I definitely don't think the second is out of is not possible. I think today we're going to mostly see TPUs sold on a per hour basis. The second is definitely possible for sure. But I think today the big thing that really matters is that Google is selling to external customers, meaning like Anthropic is picking up TPU. For example, like a lot of the incremental Anthropic code stuff, there was a big training ramp with the I think it's the Olympus cluster at Amazon. But the other big incremental like pickup of all this demand, it's Google TPU. And so we should probably expect, and Anthropic is like weirdly very diverse. Like they'll pick up TPUs, GPUs, obviously Trainium, and so they'll train on whatever. And so we'll start to see more of that in the future.
So is Google's increasing CapEx, is that for their own internal development, or is that going to NVIDIA, or is that how is that increasing CapEx that we recently saw flowing through the
Sorry, so Google's increasing CapEx.
Well, we saw Google kind of revise their CapEx kind of plus 10 billion, and I'm asking, is that going into NVIDIA, or is that they're making it, is that going for their own chips and their own, like where does that flow through downstream in the ecosystem, that CapEx increase?
I think you can say all of the above. I don't think that there's like the answer is there's no more GPUs added, but I do think the thing that we're incrementally being added is TPUs in their own ecosystem, meaning Broadcom, Celestica, other partners like that. But also, I do think power is a big part of this. The thing that we've been really, really highlighting for the last for the last year is how conservative Google has been on the power side. They've been way more conservative than their peers. Microsoft effectively said yes to every single bit of power they could get for all of 2024. Google did not. We never really saw the CapEx surge. We saw it on TPU, but we never really saw the power, the frantic search for power that other peers are doing. And we're starting to see that there. So I think one of the ways you can think about it, and I think other than, we talk about chips, the other part about this that I think is massively accelerating as well is data center in every way, shape, and form, right? Like a good example is Comfort Systems, who is definitely a Google partner. They make modular data centers and their results were fantastic. Like they increased the backlog of their products by like 50% quarter on quarter. What does that imply for end orders? Up massively, right? And they are definitely one of the big partners for Google. So that's an example that you're kind of seeing the acceleration and how it flows through the whole ecosystem. There's a lot of other niche data center players. Yeah, but I think that's one way. That's like one of the big other incremental things: power and data center.
Yeah, it's definitely like the only thing that's working in the economy is essentially anything downstream of AI CapEx.
Yes,
is
100%.
Everything else is shrinking. So it's everything from the ENC to the the Quantas, the MasTechs, to the person making the generators at GE. It's that whole value chain that starts at at the data center really, and when you is there any way to know how much of the CapEx is going for GPUs versus data centers versus like power? Is there any way to kind of dig into that? Is your company able to do that at all?
I think we have a lot of work and we do a lot of work. I definitely can't tell you the proprietary way we do it. Like, we have a mix of like, we have our estimate of chips and we have our estimate of data centers, and we get it through both of our sources, right? And that's how I would say that's how you get it, right? It's like, okay, you can add 1 + 2, you can see the acceleration maybe on the power side or the data center side. You're going to see the acceleration on the GPU or the TPU side rather, and that's how you get to the right answer. But yeah, I'm not gonna give away the secrets. I don't have the methodology available in front of me, but that's probably how you do it, and that's what we do here at SemiAnalysis.
That's what I was.
Doug, I can give you AlphaSense's kind of stats from our expert culmination. I ran a deep search on this question. If you're interested,
yeah, I'd love to hear it.
We see the accelerator and server market being about 30% of the build, driven by the GPUs and custom ASICs together. And the pricing trend steps down every 18 months or so overall. And then the next layer is networking and optics, and that's about 15%. And then power and cooling is about 36%. So it's actually gaining, according to our experts, cumulatively. And then building and shell is around 19%.
And this is where your company really differentiates, right? We can see the overall high-level CapEx from the hyperscalers. We can do expert network calls and piece it together, but you guys have it kind of bottoms up, and you advise these companies, the the data centers, they're also your customers. So you kind of have the inside look
Yep.
on what it is. So you guys are the
Look, yeah, we are definitely the experts. Like that's the like look, when a data center, big data center project is looking for a customer, they're often talking to us, right? Like when someone is talking about like at an ENC company, like we have clients like this and they're like, what's the trend at the accelerators? Guess who they're talking to? They're talking to us. We understand, like, that's the reason why we go to 80 conferences a year. We understand where it's going. We tell people the rack level density stuff of what we expect and what we're seeing in the market. They're like, wow, that's really crazy. And we're like, that's what they're saying. So I think that that's the reason why we got a job. Right. And I mean, that's the reason why we have a differentiation. It's like, our moat is effectively we're working really hard to know the truth. And we're probably one of the most like truth seeking organizations I've ever worked at. But yeah, we're going through every step of the way to understand what's the real cost of renting a GPU. I think that that's something that we did an amazing job on. It's called the AI TCO model, but effectively we did like, the total capital cost as well as the leasing cost and overhead and the co-location cost. And then how does that flow through all the way to the per hour basis? What's the marginal? What's the capital cost? What's the, and then over a 3 to 5 year project, assuming some prepay, what's the IRR of the project? We did like this massive fucking project in order to like calculate all that, as well as calculate the pricing, as well as calculate the depreciation curves. So not only do we have the pricing that we see in the market, but we also have a projected price decline that's been like massively accurate because you could just see depreciation flow through because these are 3 to 5 year projects, right? So that's why we are the best at what we do. We understand every step of the stack. We have people go like, I think it feels like half my colleagues, but many of my colleagues are at OCP today, or I think it just finished in Asia. But yeah, we follow every bit, and that includes like some of the data center changes too, right? Like the data center itself is massively changing. The data centers of 2025 and 2026 are going to be completely different than the data centers of 2024 and 2023. That's pretty well understood via Vertiv and the power density stuff. But we think there's even more changes to come, right? We're talking about new designs that are being done. And we have this another whole practice here called the networking, where what we do is we look at the topologies to understand like, hey, how many, leaps and spines this is going to take in an 80K GPU cluster with Spectrum X versus not versus Arista versus, white box, right? We do all the work there to understand how much is the BOM costing on the networking side too. So,
and you guys, when CoreWeave came out with their IPO, this was kind of a new model, right? We into the public markets, right? We had the hyperscalers, we had Nebius, but CoreWeave was kind of, and I remember them saying on TV, people don't understand our business. And
yes.
And there was a bad time politically, just from a macro perspective as well, with where Trump was with his negotiations and stuff with China. So that was just bad timing. But I remember you guys made a very contrarian, high conviction call, and which is great. But I'm curious about what led you to that. Hey, we understand what's going on here, and obviously the market, there was no borrow. I mean, they couldn't find another share to short.
Yeah. Which, to be clear, like some of the price action, let's be real, is very, very, very dictated by like how it was structured, right? Like, hey, they shoved it into some anchors. Like, NVIDIA is not going to be selling, guys, and so like they even collapsed the float. Like, and you guys understand how this works, right? Like low float, like, and we're going into the lockup, so we'll see some price action on that. But like, look, we did this project called ClusterMax, which is coming out. We're like, that's going to be a whole process and product and practice within semi-analysis as well. ClusterMax is like understanding that like a GPU is actually not surprisingly, like you buy a GPU from Nebius, you buy a GPU from XYZ NeoCloud, your user experience is going to be hilariously different. And what happens is everyone is selling into the price at some level of price, and there's like price discovery via just quotes out there. But what we're doing is we're actually creating price discovery by saying, hey, we work with I think we talk to 100 plus NeoClouds, and we work with them, and we're starting this thing called ClusterMax where we rate their things. So like, platinum, I think platinum, gold, silver, bronze, and then underperforming. And these are just like basic checklists, not even basic checklists, but like user experience of what is a good or a bad NeoCloud. And so we worked with, I think on ClusterMax V1, we had 30 something NeoClouds and 30 something experiences to understand what it's like renting a GPU. And there is one company that is completely different than anyone else. They are subject matter experts. They understand the burn-in. They understand how to ramp a cluster faster than anyone else. Their time to market, as well as their throughput and efficiency, is just a completely different beast. And that company was CoreWeave, right? There's no, like truly, they stood alone. And I understand the longer term considerations or fear, like, hey, you could argue this is like the most bearish take I could think of. This is a short-lived asset. airline lessor, right? That's like, what do those trade at? Like some multiple of book making some kind of ROE, right? But the reality is we did all this work on AI TCO to understand how their unit economics of the whole project was, including financing costs. And we're looking at this company and we're like, dude, they're making they're making like 25, 30% like CAGRs on these like project CAGRs on these projects that they have already booked, include with a cost of capital in the 15s, right? So you're like, dude, this is a company like they are doing like the unit economics of this business is actually surprisingly good. Now, over the long run, competition will make it lower, but right now, moat is a verb. They're going to continue to out execute their peers, and that's why we like them so much. I understand that, hey, maybe in the long run, there might be some competitive concerns, but that happens when the ecosystem slows down. And today with GB200s, which are going to be way harder to ramp than H100s, we think CoreWeave is still the leader. They're like the de facto leader. Like my understanding is some of the like how good you can ramp your cluster, right? Because a lot of these people are like ex-crypto people. It's like how much experience you have HPC, and how close are you to your NVIDIA rep? The NVIDIA rep will give you best practices. Everyone else is like kind of learning and like trying to get the most resources and understanding to ramp this as fast as possible. And then you look at CoreWeave, and CoreWeave is the only company that's like telling the NVIDIA rep how to make the ramps better. Okay, like they're actually subject matter experts. They're the bleeding edge. And that to us was extremely differentiated. So if you rent a GPU cluster at CoreWeave, you're probably going to have a much better experience. And so that makes a lot of sense that they're going to attract a lot of customers. And then this other dynamic I think is maybe unappreciated about this, like of being a short seller of CoreWeave. Maybe understand how much you hate or like the stock, but like how can you predict demand? There isn't a P and Q model. What's going to happen is these 10, 20 billion-dollar contracts are going to come in from the sky. And we have a conviction that they're going to win them because they're the best. And like if this is a project finance, it's going to be NPV to zero, and like you're screwed. So that's like pretty much everyone going into the IPO was extremely bearish, and we're like, dude, people are talking to me about like trying to get like borrow on the offering, and I'm like, guys, they're actually really good at what they do. I understand some of your long-term concerns, but this feels like stepping in front of a train during a giant compute shortage, and that's what it is. So sorry, that's a long ramble.
Right? There were a couple contracts right after the IPO that they won a few in a row. And, obviously it was exasperated by the no borrow, but, backlog goes up. That's the leading indicator. And you kind of understood this technology. So you knew that they'd be the winner there, or you had an educated guess that you would. I mean, what that clip you just did there, that should have been in that Net Roadshow. I mean, I know they had Sam Altman kind of saying how much he loves it, but I think if people actually got to the field level intel, that would have been a whole nother story. Were your clients, were they talking to you? I mean,
they were
during the
and I mean our take was bullish. So and we were right. I mean, that's just like, and that's a reason why we got a job, guys. Like, I mean, I think the thing is like you can cover these companies, you can follow this stuff, but like the bleeding edge of technology is what we are interested in. Sometimes like we are going to figure out the problem, like the answer to the problem before our company does. Okay. And so that like, and what that means and requires is you have to be at the bleeding edge. You have to be at these conferences. You have to understand these things that are happening 3, 4, 5 years out, the debate on immersion or not, or like stuff like that. Like that, and that's like a complete throwaway. We have so much technical knowledge and we're going to these conferences and we're cooking. Like the team does not mess around. We work very hard here to understand what's happening. And I think all of that insight is downstream of that. And so what happens is it's not predicting the future if you understand technology, because you're just making first level assumptions of what's going to happen based on everything you understand of the space. You're like, okay, this is the best product. They're going to win customers. And then when they win customers, you're like, told you so. Like it's not rocket science, but the difference is we're doing the work, right? We're doing the work. So and that's really what differentiates us.
With CoreWeave, you said they're the best versus the other neoclouds, but obviously people could rent compute from the hyperscalers as well. Help me understand that decision if people are going to the neoclouds versus the hyperscalers. You can get the same NVIDIA chip either way.
So neocloud versus the hyperscaler, right?
If you're a customer and you need compute, I mean, I know one is a much more complex and it's an
so let's even talk about this because I think our most controversial, most feedback, most I don't know, annoyed Cluster Max participants were the hyperscalers, because you'd be surprised. But if you go look at our results, and we're working on Cluster Max all the time, obviously. I think we even have a website now, clustermax.com. No, I think it's clustermax.ai. But clustermax, pretty much we talk about our findings. It's like this giant tome, but like you can really simplify it to just like the answers. And like, Google Cloud was a bronze. Google Cloud was a bronze. That's like, AWS was a silver. Azure was a gold. Azure, being fine. Oracle was a gold. Oracle's pretty good. They understand what's going on. But Google Cloud, the inventor of the transformer, the owner of TPUs, was a terrible experience. And that's like an extreme, in my opinion, that is an extremely consensus contrarian take, right? But I think if you actually understand the technology, it is plain as day, because Google Cloud was networked with 200G NICs. Okay, so like the top rated is a 400G NIC. You're let me think of like the analogy here, but like you're you're essentially running your entire car on lower octane fuel. You're mechanically limiting it by having worse and shittier networking. And that answer was available to anyone if you just went and rented the GPUs. And that's what we did. We rented the GPUs. We worked and we talked and we benchmarked. We worked on we even gave them a lot of feedback for their customer process. And so we went from a first principles basis, like, hey, who's the best? And so some of the answers were contrarian, because there's this like reputation. But like when things change, when there's big regime shifts, which we're going through right now, reputations like do not get you results. Okay, you have this reputation for being good, but results are results, right? And so what we did is we tested, and we tested these prior assumptions, and a lot of the answers were hyperscalers aren't as good as many of the leading neoclouds, like Crusoe. The power, and I don't know the business model. I believe they're in flux, but they're mostly known for flared gas in West Texas. They're a partner with Oracle. Crusoe is a gold. Okay, this is like a former crypto mining company outperforming Google Cloud. And you're like, why is this? Because literally no one, like up until 2022, a 10K GPU cluster was like unheard of. We're talking about 100K GPU clusters. Everyone has an opportunity to be in the race if the start line started in like 2023 or 2024. And so what we're finding is that capitalism works, competition works, and the best are winning, and they're doing a better job of it. And that's the reason why we did Cluster Max, is because the dispersion and outcomes is crazy. But I think that the other thing too is that they're like testing the prior assumptions is what we do. And I think we really did a good job of saying, hey, these hyperscalers, like, the emperor is not, wearing it close. Like that's what it comes down to. And also we were early as hell on AWS losing the future of AI. Like, I think in 2023, we wrote, SemiAnalysis wrote about how like AWS effectively is not going to win the future because they're trying to do everything in-house, and they're so focused on like effectively owning their own compute ecosystem. They're just not going to pivot to NVIDIA, and they're going to be a laggard in last place. That ended up being true. And so here we are. And yeah, our track record stands for itself.
Absolutely. And what are your thoughts on NVIDIA expanding their ecosystem and their moats, to, start obviously with the chip and then the networking and CUDA, but expanding it more and to even box out the hyperscalers more?
So that's a great question. Let's kind of talk about, I feel like CUDA is not even like it's not even incremental. Everyone who's listening to this should understand, hey, CUDA is this really great ecosystem that really makes a big difference. ROCm is trying to catch up. We wrote about the ROCm, the AMD versus NVIDIA ecosystem. You can go read that in your own free time. The networking part, I think, is the real incremental thing that's really changed in the last, let's say, year or two. The copper domain scale up is the big difference between the GB200 and the H100. And like, what's the big deal? Well, moving bits is such a big part of the energy and power of inferencing and training these models. If you have it all in copper, which is the closest, the energy efficient way to do this, you're going to have a much better TCO. And that's like, the big NVIDIA networking thing. But it's not stopping there. They're first to doing the rack there. They're going to be first to the 244, which is going to be another scale up, as well as making their chips better. So I think that the networking side is really where the big plunge and push on for competitive differentiation is right now. But honestly, we'll see, right? Like the B200 was in a lot of ways two H100s stitched together, reticle sized dies. And I think what we'll see is actual generations of like, 3 nanometer, 2 nanometer chips and multiple reticle sized dies. It's going to have a whole nother level of scale up, meaning better, more power and more scale up domain size. And that's going to be the big differentiator between NVIDIA and others. So like, outside of like, so I actually wrote on fabricated knowledge when I was like still an independent. I wrote this like thing a bajillion years ago. It feels like it's like the three-headed hydra of NVIDIA. They have the compute, the networking, and the software ecosystem. The problem is almost every winner so far has only focused on cutting off one of the heads. But by the time they beat the one head, right, it regrows because next generation they get better. And then they find themselves lacking because their software ecosystem isn't working. Their networking isn't as fast. And that's quite literally the last generation of all these AI accelerator startups, right? The Groks and Cerebruses of the world. What they found is, hey, they made this really good compute thing. Well, their networking or their memory bandwidth or their memory scale up wasn't good enough to beat an NVIDIA chip. And so now they have to go back and tape out a whole nother chip. And at this point in time, NVIDIA's already taped out the next. In fact, they're working on the one after that. And so you have to beat NVIDIA, not just on one metric, you have to beat them at all metrics at the same time. And the only way you do that is you've been playing in the game for a long time. And that's the reason why TPU has such a good shot on a relative basis. They have a really novel scale-up solution. They use OCS, which is an optical circuit switch. They have this like, the 2D and 3D toruses for the ICI. They have a lot of interesting networking innovation. They have a really good cheap compute core. And then on top of that, they have JAX, right? Which is like a pretty decent. And so that's like, if they get external customers, they'll make the whole ecosystem stronger. TPUs have the chance to innovate because they have all of those places versus like Trainium and all these other things. They have all these other things they have to catch up all at once. And that's the real hard game because at the same time, Jensen is putting out a chip every single year. And that's the race. So, and you can look back in history actually and kind of see how this works. The tick-tock, which is kind of, I would say what they're doing is kind of similar to the Intel tick-tock of old when it was still working. It was just this relentless pace that was almost impossible to keep up with. And that's what I think NVIDIA is going to do and continue to do until, I don't know, until other people give up. I mean, you're seeing, so.
Yeah, and we started to talk about Cerberus, but that leads me to ask about the move towards more inference from training and what that means for the various components and the demand. And I'd love to get your thoughts there.
Yeah, so let's talk about inference versus training, because if we're talking, it feels like light years ago, the late 23, or maybe it was at late 24, about inference versus training, how inference was only 10% of the compute and training was 90% of the compute. And now I think today we actually have that flipped. Inference is probably 60 or 70% of the compute versus training is only 30%. The GPT-5 announcement, I'm actually unsure if it's a new pre-train. It might just all be RL. So effectively, and we've written about this extensively on semi-analysis, talking about how RL is going to be like, effectively all this like post-training reinforcement learning, which is like a different kind of, it's still training, but there's different ways to optimize. That's going to be a little different than the past. And so that's the inference test time inference, meaning that you make longer and longer context windows and do the, chain of thought thinking to make better and better results, blah, 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 blah. That's well understood and has a lot more tokens generated with this. But I think that kind of innovation is what we should continue to expect to see. And ironically, people are like, well, NVIDIA's moat is only in training. It's not an inference at all. All these ASIC inferences are going to have an opportunity to pop into the game. The reality of what we've seen actually is the NVL72 GB200 is actually is like probably the best inference machine alive, because the whole point is if you want to scale up these context windows to very, very, very large memory size, what you need is a big pool of scale up memory. And that's what the copper backplane of the NVL72 does. And that's like the huge competitive advantage. So ironically, while people are talking about the ASIC and having faster inference, I think that, people don't really understand the game. I think there's also like some other I don't know, we might be writing about this soon because I'm just like almost pissed about how people don't understand this. Tokens per second. You see like Grok or Cerebras saying, oh, we have all these tokens per second. They're only able to do it on specific models because they're very hyper trained. And they're like, the ecosystem's hard to do it on lots of new different types of models. But on top of that too, I think an important thing to understand the difference between for Grok versus NVIDIA is one is a race car.
serving one user, and the other one is a bus serving like 50 users at the same time. And so while one's token per second interactivity might be in the 30 to 40 range, let's say like 30 to 40 is like pretty human readable for and what we often see for the token inference speed, and then one is in the 300 speed. The reality is the 300 speed can't amortize their memory to have multiple users. And so you're actually only getting 300 versus with the batch size, batching meaning that you have like a big amount of memory and you're able to stuff multiple queries into one inference call. You're able to service like 30, 40, 50 users all at 30 tokens per second at the same time using parallel memory. So that's something I think people just don't understand at all. So yeah, you have a really fast 200 tokens per second, but if you're doing 30 tokens per second for 50 users, that's 1,500 effective net tokens for multiple users. That's a bus versus a race car. And the reality is if you want to own the future, you need to be having really good fast buses, right? We're not talking about like single plane Cessnas flying over the ocean, right? It's an Airbus wide body. And that's what NVIDIA does best. They're moving the biggest amount of tokens for the cheapest amount of costs, and no one else is really competing with them. So yeah, I think on inference side, there is opportunities. I think that specifically Trainium is very interesting from that perspective. The memory bandwidth and how that's designed, we've written about this, is a good example. But on top of that, I think TPU as well, actually. The TPU really long context windows is very uniquely enabled by their networking choices and the ring attention and like the very large memory context windows. That's an example of like an inferencing mode. But I think NVIDIA, surprise, just has a massive competitive advantage there that I think many people don't understand or appreciate.
So where do you see NVIDIA's market share in 3 or 4 years? And then also, Michelle, I know you've picked up different things on the on your network as well. I'm curious where you guys shake out.
Doug, I was actually going to dig into you in terms of the NVL72. It sounds like that's going to be the leading indicator, that networking piece moving forward. I was interested in that comment. Do you think that that's solidifying that competitive moat there, that people are underestimating it?
Yeah, I think so. I mean, I think that the inference side, right? We're talking about like the KV cache, right? Which is key value store, which is to understand all the tokens within a single instance in use, right? We're talking about these high multi-turn projects, right? And there's other ways to scale it out, which is like DRAM or NVMe, like over a network attached storage, whatever. We're not going to go into that. It's probably like beyond. But the thing that's most important is having the most memory available at the fastest speed. And the NVL72 is the perfect example of that. And so, yeah, that's a huge competitive advantage. If we're talking about like a good example is like, where is all the big incremental use case in terms of number of tokens coming from? Right now, it's like Claude Code. Claude Code is blowing up context windows. We're talking hundreds of thousands of tokens, maxing out the context window. And how do you have the biggest context window? Doing what NVL72 is doing. So they have the best the ability to scale up that memory world size using copper, which is an order of magnitude better in power, is the key differentiator to being the best at inference. And that's like a huge insight. And honestly, in my opinion, pretty understandable in first level, but I guess, people aren't always deep into the thing like we are.
Have you looked into what this could mean for copper demand? I know people have made the broad comment that copper.
No, I don't think we have quite a copper model, if that makes sense. And I think there is a debate actually of how long does copper continue to last, right? Because copper has an issue so it's like SerDes, serialized, deserialized, which is the type of technology in order to, it's complicated outside of this podcast, but like SerDes for 224 is like where copper is at the leading edge. And what that happens is to get to 448, you really shorten the length. So the real question is, what's the next generation going to look like? We're seeing a lot of new clever designs, and the Kyber rack, which we wrote about, talks like kind of actually what it does is instead of expanding copper reach, it actually shortens the compute distance to each other by making the backplane closer. And that's an example of like an interesting innovation using data center size space. So I would expect this to continue, right? Like the Kyber rack is a perfect example of this. We're going from 72 to 244, right? That's like a 4, I don't know, I can't do the math right now. I would guess it's like a 4x right there of scale up domain. So boom, or it's 288, sorry. 288. So we have a 4x of chip in the scale up right there. And that's an example of how they're going to continue to push that roadmap. Meanwhile, they're going to continue to push the ecosystem roadmap, meaning like having all the support for all the different types of models and just getting it to work out of the bat, as well as push the memory bandwidth of having, you know, more HBM stacks than their peers, as well as pushing the compute and flops on a per die basis. They're going to be pushing all of these all at the same time. And that's what keeps NVIDIA in the lead. So anyways, rolling this back to the market share size, look, in 2023 and 2024, I would say like flops, percentage of flops, like NVIDIA was like 95% or something. That probably can't last forever. And we're starting to see real ASIC programs crack that, namely Trainium, but also MTIA, but also TPU, but also maybe Maya or whatever. And AMD actually, AMD in this process. So I think that number has to go down. But what does it look like in the long term is really hard for me to know. I think it's, you know, probably south of 90, but is it north of 60, 70? Probably. And I think it's really TPU actually really cracking into other users could be where I can really crack that open versus AMD. And I think if the entire ecosystem slows down, I think the competition can catch up. Meaning that if there isn't this like massive demand for like more for models of size, throughput, and tokens, then I think that can maybe you can compete on cost and rationalization and not pushing to such an aggressive spec. You kind of saw this in 2000 actually. The single lane speeds of networking went from like, I don't even know the numbers. I want to say it's like 10 megabytes to 10 gigabytes in a very short amount of time during the telecom era. And then it stayed at 10 for like a decade, right? And that's when, you know, Juniper and Cisco, like Cisco lost its moat effectively because everyone is able to kind of attack a much more relaxed technology standard. But as it continues to be very, very fast and very aggressive, odds are it's going to be very hard for others to compete. So, you know, it's an open game. There's a reason why we have a job. We're here to watch and see and who can win. There's also like other things, you know, the ASIC side, right? They're trying to crack into the compute total market, but also NVIDIA is also trying to cheapen the ASIC vendors. Like the MB Fusion is actually a way to effectively cheapen their competitors' competitive advantage, right? By licensing or selling chiplets, specifically for NVLink, which is like the thing that they're really struggling to attack on the networking side, whether if it's SUE or UA link, or by also scaling out some of the die to die. A lot of these things are like the services that Broadcom or Marvell offer to the hyperscalers. And so by essentially like, you know, freely licensing or cheaply licensing, it cheapens their competitive advantage and is a way to kind of keep a damper on the ASIC providers.
Super enlightening. I feel like I've learned so much and I have to watch it at least one or two more times just to really digest it all. Last question for me before we wrap it up. On the pricing dynamics for both the contract and the spot market, and then also the market itself, how much is in the spot market now, and what are the dynamics you're seeing in terms of mix there?
The vast majority of compute is contracted. That's our view and belief. The spot market is an important tail measure. There's definitely, you know, spot does inform contract a little bit, but I think the prices will go down effectively into the end of the H100. I think there's going to be a marginal cutoff where effectively like people are probably going to be selling H100s for like $1 or something like that. That's probably to be expected because it's like if you have a fully depreciated H100, your cost is just the electricity, and how you'd price it is you mark to market what you see the B200 or the GB200 market prices are, and that's obviously work we've all done in the AI TCO model, right? Where what we do is we create the economic life, and we make this assumption that based on the recent B200 pricing, we mark to market what will be the residual value of H100. So I think that price is going to continue to climb, especially as you continue to see some of the big contracted clusters come off contract and then they have to release it. What's gonna happen is, like, let's say you have a 2 or 3 year lease on a contract. It's leased up until the end of the year. Then you have to turn around and lease it back into the market. You're gonna get a much lower price, but you've already probably, for the early pricing for 2023, you've probably received the entire cash value and a return project on the entire cluster. And so if you can effectively just get something on the margin that would probably mark to be B200, that's like a big deal. And you know, it's really interesting, and just like an anecdote here, ironically, for all this conversation of like contract pricing going down and the B200 being better, B200 and H100 or H200 in the open market, the B200 software ecosystem is still being developed to the point that I would argue the H200 is a better TCO, meaning you'll be able to throughput more tokens on a H200 because of how mature the ecosystem is than a B200, which is like a huge counterfactual. That's not true with the closed labs, because the closed labs are filled with the best the best ML system people in the entire world, and they're getting their money's worth. But the actual open ecosystem, I think it's a little bit more interesting and more nuanced than you'd think for the trade-off for old versus new compute and the cost of clients that we can expect. But yeah, it's like more specific stuff like that, I would argue, we have a whole practice specifically focused on finding quotes, contract value, spot value. We scrape all the spot stuff. We have like a large amount of like, anecdotal contract, and then we track it very meticulously.
Yeah, great. Definitely have to take a look at that as well. This last one, the depreciated life, you're kind of saying it's, 2 to 3 year contract. We've seen some of the public filings 5 to 6 years for their blended compute. What are your thoughts on the actual GPU part for the actual life of them? And will they be able to find work if they're all rolling off in 3 years versus newer products?
So it's going to be very based on the market, right? Like price is the clearing between supply and demand. I do think they'll be able to find stuff on the margin. We saw this actually with the late A100 generation, where at some point in time, the pricing collapsed so much, like let's say I wouldn't say sub 50 cents, where it just didn't make sense actually, where there is a replacement curve where you would actually take 2 A100s over 1 H100, right? And we saw the price actually kind of recorrect and snap back into the efficient curve. There is an efficient curve, and I think that you'll start to see these H100s be released, as in released for customers, like be rented over contract spot or whatever. But it's definitely going to be lower. And I think it's going to be a game much more focused on the marginal cost. And I think that if you have a fresh H100 without depreciation, you might be taking a bath. But if you have an old H100 with depreciation and a hardened cluster, you probably aren't going to take a bath, and you're going to be able to like effectively pick up fully, or maybe not fully accounting depreciated, but like cash paid for depreciated. Now let's specifically talk about the useful life. The 6-year useful life, I think, is debatable. I view it more like a 5 or 4 year. I think almost all contracts, like when you first come out, you can get paid in like 2 to 3 years or something like that. And I think the 4 to 5 year definitely makes a lot of sense to me. There's a lot of innovation that I think could possibly lengthen the lives of H100s, specifically on disaggregated pre-filled decode, which is where you'll have serving GPU clusters where some will do pre-fill, some will do decode. Probably too complicated for this podcast, but specifically what this happens is, maybe how this would happen is like you can kind of choose a heterogeneous mix that would specifically be be able to like exploit a cheaper part of a memory or a flops bound workload that would once again be useful. I think that this is going to be a lot of the infrastructure work that happens as the ecosystem matures, but we're probably a little far from that. So this is all to say that there's going to be a lot of dynamics. Prices are going to be lower for sure as it becomes released and as new chips come online. These things are fast price declines. That's what we expect to see. And actually, ironically, the GB200 slowness of the ramp for racks, we saw, because the replacement value is not available. Actually, the pricing decline stopped accelerating. It actually decelerated a little bit, because what would move the price down, which is the new chips, was slow, because they're still like struggling to rank racks and all that kind of stuff. And so that's like kind of all the different dynamics of an H100 pricing decline. Sorry, I might have gone too in detail there.
It's great color, and we're about at our time now. So I do want to thank everyone for joining us today. A big thank you to Doug O'Loughlin from SemiAnalysis. And Doug, where can people get more information on SemiAnalysis for some of these products that you offer?
Yeah, so sales@semianalysis.com. That's probably the easiest email to reach out to. I believe we are, for most of the major platforms, we've gone through compliance. Another thing, if you want to like touch point with us, like our free newsletter, in my opinion, offers amazing value. The paid newsletter, which is like $500 a year, offers incredible value. In my opinion, if you just like read that well, you will like do pretty good on your homework. And then obviously, if you really want to be talking to the best in the space, which we are, we have a lot of other product offerings like core research, which is our basic finance product offering, the accelerator, the data center, the networking, the AI TCO, and then also soon to be tokenomics model. That's like the big thing. We're going to do supply demand of all tokens. That's going to be like, you can imagine that's a big deal, but is still in the works there, and we're working really hard to keep up with the whole space. So yeah, sales@semianalysis.com for the email. Semianalysis.com is another easy way to like kind of get into the whole ecosystem. Yeah.
And also a big thank you to Michelle Brophy and AlphaSense for hosting this webinar and producing it. And you guys obviously know, if you've been following me, you can go to alpha-sense.com/pitch to sign up there if you don't already have it, which I know most of you already do. And feel free to ping me on LinkedIn. I'm happy to put you in touch with anyone. And thanks for joining in. And again, thank you, Michelle, and thank you, Doug.